Hey, good afternoon, good morning. Let's go ahead and get started with our broad market analysis. I'll try to make this really quick and straightforward. We're going into earnings season. We just got finished on Friday with a couple of the banks reporting. They dipped, then moved to the upside, and then we start on Tuesday with Morgan Stanley, Goldman Sachs, and some other banks that I honestly don't really follow. We have United Airlines. I just kind of circled what I'm interested in. And Wednesday, looking at Charles Schwab. After close on Wednesday, Alcoa. Before open on Thursday, P&G, big name. And then Truist, I'm just interested because here where I live, these things have been popping up all over the place. So I'm just kind of interested in Truist. Don't know much about it, but just circled it. And then, of course, Thursday afternoon, we have Netflix coming in as well. And then you can see the report there on Friday. Let's go ahead and move into Market Watch for this week. I feel like it's pretty straightforward. I went ahead and underlined, the things that I'm interested in that could cause a little bit of volatility in the market. We start tomorrow, Tuesday, January 17th, with Empire State Manufacturing Index, retail sales. And then as we move on down here, we have the Beige Book on Wednesday as well. Thursday, initial jobless claims. Then you have a Fed head talking here at 1:15, Brainerd. And then on Friday, existing home sales. And then you have Christopher Waller speaking as well at 1. So overall, I feel like it's a pretty quiet week. And when I see quiet weeks, I think choppy to down. I mean, I honestly do, especially after a run up. And so as we get prepared for bigger names reporting, as I said, I don't really see a whole lot of big names coming into this week. So it gives an opportunity to kind of digest the last previous moves up in the market. Now, again, I'm speaking from, and it sounds like a thesis. So, as we all know, price is king, and we will let it dictate how we trade. Most likely, for me, nothing changes. Like, we wait for prices to come down to lower edges. If we find something that looks like it's setting up, that it's pulled back quite nicely, then we'll go over into the intraday. And that's where Melissa and I will look at the PMZ trades and look to trade things either to the upside or downside. Okay, so again, we'll let price dictate things. Let's not try to put too much emphasis on what we think will happen and just kind of follow price. Let's go ahead and move on. Our next chart that we'll be looking at was last week. So I always like to review these, and let's go ahead and annotate on these. The first thing that you'll notice here on the SPY is that, price came down or pushed into, and you guys should recall this because we coach every single morning, but we gapped up into the target. And as we know, each target to the upside is resistance until proven otherwise. Targets to the downside are support until proven otherwise. If my overall sentiment was sideways to up, then we're looking, I mean, if you could be patient, you're looking for the pullbacks into these major levels to go long. All right. Now, if my sentiment is to go short, then every time we pop up into these upper levels, you look to add on to a short position or to start your initial short position. Okay. So notice how well this level was respected. Again, committing to the candle, that's a huge thing we talk about here at Trendy. So if you're committing to the 4 hour on the neutral strategy, you will see that we never closed over the target, then pushing down into the lower neutral. Now, you can see that we came into the bottom neutral and we did close under here, but again, if you go back to the overall sentiment, my overall sentiment was sideways to up. So I didn't really want to get short here, and that worked out, right? Notice that price did push up into T1, T2, and T3, and we stalled at T3. We pulled back to the daily edge, and that was a buying opportunity on Friday. Matter of fact, that was a huge move. And you can see we closed over that final target at 398. Over here on the Qs, same thing, folks. We gapped up, we pulled back. We actually held the neutral, which was perfect. So it dipped down, reclaimed, and then we hit T1, T2, T3, and I had a T4, and then we moved up even more there. And that's because the SPY is outpacing the Qs, and so the Qs had this like bigger run because it had more divergence, if you would, between resistance and where price was. So it ran pretty well. All right. And again, overall, these looked really nice from this perspective. If you went long over the neutrals, these paid off very nicely. The next thing that I want to show you is going to be the SPY neutral chart for this week. All right. So this is your neutral strategy between 399.88 and 396.27. This is your risk. So if for some reason you're looking to take a swing trade, we're looking to go long over this level, stops would go under the 396.27. But again, price is going to have to show us that it can get over that level. Notice that the levels that I have this week are pretty tight. I mean, this is only $6 to the upside. The reason why I'm doing this, and we can obviously every day, if it continues to move to the upside, I can give you new targets. Again, just reach out to me or remind me, and I'll be happy to. But for right now, I think it could be a tight week, meaning, again, digestion. All right. And because of that, my levels to the upside, they're not, there's not a lot to give there. If we do break over 406, then, obviously we could come up into this pivot high here, and then we have the trendy edge up here around 410 and 415. To the downside, I've circled support here, so please note, if we indeed pull back and digest and we just kind of a slow creep move down to the downside, I would expect the better area for support to come in is right around the circle. We have a gap fill here. We have a cloud here as well. So again, when price is above the cloud, we're looking for this to be support. Also, for our guys and gals who are using the TTM squeeze, please take note of your TTM squeeze down here. We have one trendy blue. It's looking pretty good. We also have red to white to green. Basically, our EMA crossovers and so forth are telling us that this is a bullish run and that the momentum is to the upside. And I love this because I really feel like the candles themselves really they just make sense when you're looking at the TTM squeeze. The difference here and then the difference here is just lined up. But again, love to see a little bit of digestion. I really would. It just kind of flag here. All right. And just like that. And then later on in the week, we get that breakout. Perhaps Netflix kind of gives us that move or gives us the move to the downside. We'll see. Again, price is king. This is the neutral strategy, though, and it's pretty straightforward. Once again, my overall sentiment on SPY is sideways to down until it can prove that it can take out last week's high. Once it does that, then we'll be looking to trade that to the upside. Yeah, so pretty straightforward. Let's go into the SPY bigger picture. So this is using my trading view. And again, guys, if you're new here, we have indicators on trading view or thinkorswim. Your indicators on TradingView are really nice because they have the mobile version. And honestly, when I look at my phone, it looks just like my charts. Like I can scan the PM or can't scan, sorry. I can see the PMZ levels. I can see my edges. I can see my cloud. I cannot do that on thinkorswim. So that is like the disadvantage versus the advantage is the disadvantage on thinkorswim. I can't see anything on my phone. The advantage, I could just go over to TradingView and check it out really quick. But for me personally, my lifestyle, especially right now in the winter, I spend most of my time around the house and in front of the charts. Whereas when the summer comes, I will have to rely a little bit more on TradingView as I like to trade what's called the beach trade, right? I try to get away in the mid afternoons and just let our trades kind of work out for us. Okay. Anyways, the bigger picture here, notes quarterly over the cloud. That's a nice look, right? We're above the cloud. We created some divergence last year. Nothing's changed. This is the same zone that I gave you. We pushed out of that and price is now above the cloud. And matter of fact, if you measure from 2020 into the pivot high, we are now back above the bullish channel, the 38.2, which is 390.25. So going into this week, that would really be my line in the sand. Like if it doesn't break down below that, I think we stay bullish into earnings. And again, price will dictate whether or not something big's going to happen there. Now, the quarterly candle, we have, 2 months and 16 days left until this closes. A lot can happen. I don't need to tell you that. So, yeah, it looks great now. But what I'm trying to say is if for some reason it starts to break down, that's not a good look. And we could, look for that nice little short cycle in the market. Okay. But for right now, I want to be long. I want to be net long. as long as we are holding this level. Okay. Um, let's see what else from here. The monthly look, okay, which is going to be right here. We're in the cloud, and I mentioned that there's a bigger sideways channel that I didn't annotate on here. And basically, if you just take the top, you don't have to be perfect. Just kind of go right through there and right there. That's the channel we're in. If you guys remember, the 4 hour channel was like this for a long time, and it could be that we are progressing, right? We're going from a 4 hour channel, we broke out of that, and now we are into a monthly channel. And what do we say about the channels? If price is pushing up towards the top end of the channel, I want to be careful on longs. I want to be looking to go short, and not until it can prove itself and can hold above that channel. And anytime, if for some reason we get a pullback, the lower we get to the bottom of this channel, I want to think about going long. Some things you want to take into consideration on the monthly are the pivot lows. If we're pulling back down, but we're not taking out that low, I think it's a great opportunity to try a long right around there with a tight stop, and then we look to trade it back up to the top end of the curve. What happens is this starts to get tighter, the clouds get tighter, okay, right in here, right before earnings, and then you might get that magnificent pop that happens, or you get that really gruesome drop to the downside. But for right now, this is the bigger channel. I think that's what we stay in as far as the monthly is concerned. QQQ neutral. Let's go ahead and go over this. Same idea here. Again, the Qs, red to white. Notice they're not green yet. So there is some momentum to the upside that could happen here. Again, really straightforward. Take a snapshot of the pictures. Notice that to the upside, I only have $7. To the downside, I only have $7. That wasn't on purpose, but overall, what I'm seeing here is again potentially a tight digestion type of move for my traders who like to sell credit. This might be something I'll be looking at doing probably mid Tuesday. Not maybe right off the start, because sometimes I feel like the exuberance. So yeah, we're down right now in the futures about 7 points, and I annotated this in the room. I am short. And if we push up towards 40.20, I may add on to my short position there, just, using micros right now because I don't like to short into earnings. I really don't, because anything can happen. Names start reporting big, things start coming back, and then you're just kind of like, okay, why am I shorting into earnings? Like, we don't know what's going to happen here. So these shorts for right now are just based off of we couldn't make bids above last week's high, and we're breaking down our PMZ, okay, on the ES futures right now. Anyways, so that's the cues. Take a picture. It's really pretty if if you ask me. Higher lows here on the yellow bars. All the trendy edges are working very well. They keep coming back to find love at those edges, and until things change, I'm buying the dip at the major levels. Okay, so even if we go sideways to down, you got to be patient. A lot of people don't like to buy puts or even short. So what I would tell you, if you're in that category, just wait for the major levels. Okay. Let's go ahead and move on into the next chart, which would be your QQQ, bigger picture. And again, using a quarterly here, you can see the inside and down. We had some nice 1, 2, 3, 4 quarters down right into the cloud. This is different than the SPY. Which the SPY is above the cloud. This is not, so this is still choppy until proven otherwise. The biggest thing here is the support level. So this support level is the 618. Okay, the 618 of a measurement of your Fibonacci. So if you were to measure fibs from here to here, we're above the 618. This is a very important level because the 618 is the golden Fibonacci level. And if for some reason price is not holding above that, then this overall trend that we are measuring is broken. But right now, what it's telling me is this trend is actually still intact. It's still bullish from a 618 perspective, and you gotta stay long here, bigger picture, okay, until something closes underneath this 618, whether it be the weekly, perhaps a daily. We'll just kind of see, and we'll coach that through. Okay. All right. So the next thing, let's see if I have any other notes. The monthly. Let's go ahead and check out the monthly here on the Qs. So again, this was pushing right into resistance on Friday. Again, monthly candle, but Friday really pushed this up. It was a bullish candle. It held the support this past week. Nothing to really talk about except for the fact that there's a resistance there, and you can see the Nasdaq right now, Monday, morning, Monday afternoon, right now on holiday. There will be abbreviated hours, I believe, so they'll close here shortly. But they're down a little bit, around 40 points, and they were coming into resistance on Friday, so not a huge deal, but just want to point that out. Just underneath the cloud, though. Okay, so until we start to break into that cloud, I expect down to sideways. Same thing on the SPY. Now, once again, this is a channel. You can look at it from this perspective. This is an inside and down. I have that annotated right here. And even if it pushes up as we get closer to that inside and down, we want to be cautious. We want to take our longs and trim and pull those stops up, or we want to start a smaller put position, in the broader market. Perhaps you could get, a swing down into the 618 again, or towards the bottom of this channel. And again, pay attention to these lows. All right. A lot of people, I'm telling you, right as we get close to that, they're going short. They're waiting too long. The better place to get short is up here. Your risk to reward is a lot better. If we can't take out the lows on a pullback, then I'm looking to go long, and take that trade potentially right back up to the top of the channel. Again, it looks a lot like the 4 hours that we had, that we were dealing with the last several weeks. DXY, or the dollar, digging a deeper hole is what I've written in here. And what I mean by that is the demand zone, from what you can see here, is this candle is pretty big. So it's about right there. So the original way to draw this zone would be right here. It's a pretty wide zone. So we're just kind of like in that. When I say digging deeper, as long as the dollar is staying below that initial entry point of a demand zone, then you want to stay short. Not, we're not trading this, but the idea is that as long as it's staying in here, the market could continue to see a move up. Now, the second thing is anytime it's in a zone, this is where people, get chopped up, man, is because this is a really wide zone, and anywhere in here, the dollar could, yeah, pull back a little bit, but it could also boom, spike all of a sudden, and you're like, where did that come from? And I would say, hey, I told you, we're in a demand zone. So anytime we're in here, I really need you guys to think yellow flag, okay? Be cautious. This is not the time for me, anyways, to go full on bull mode or short mode. It's telling me the market is at a point where it wants to digest these past moves, get ready for earnings. They're waiting for details. The market, the macro look is looking for a lot of hints, whether or not, are we going in, truly into some sort of big recession, or is this just time to kind of chill? Okay. Yellow flag is all I'm saying. Again, sideways to down in the SPY and the Qs until proven otherwise. Digestion is what the dollars tell me, but understand that it could pop at any time. Okay. Again, raise some caution in here. Just be careful. TNX, okay, the Treasury. This thing is doing the same thing I've been saying. Nothing has changed, and it's head towards the 9 EMA of the monthly. Caution as we get closer. So when it comes to the TNX or the Treasury, if I'm finding support here, let's just say that it dips down a little bit more, comes in there, and then it reclaims the cloud. Be careful. The dollar is in demand. It could pop. The TNX coming into the cloud, which is support until proven otherwise. So again, could signal yellow flag that we're coming into some sort of down cycle. Okay, pretty straightforward. But just like the dollar, before I end here, the demand is actually underneath, kind of in here. Okay, so it still has quite a ways to drop if it needs to. So please understand that. My biggest thing is that I've been giving you these blueprints for many, many months, and we have been absolutely on par with analysis. When the majority of traders were scared, and talking about things were coming to an end in the world, this one little level really kept us there. And then I remember specifically when this happened, I said, look, as long as this doesn't get taken out, look for price to continue down. It did that. This was my possible capitulation event in 2022 and never hit. So we weren't overly concerned. We weren't like that worried about things. Right now, again, just a nice, healthy pullback in the treasury. All right. Next thing I want to talk about is this skew. So just listen up for a few minutes, okay? The skew. I'm reading in the room and I'm seeing the posts from Twitter accounts, myself, and seeing that some of you guys are posting comments about Twitter. I put something in the room that just reminds you guys, it's nothing personal, that main chat, and I, as the owner, right, I've always had this vision that I could create a room that was specifically around one methodology. What this does for all of you, including myself, is really rid the nonsense of everybody else's noise. Like, I don't care. You have heard me say this a million times. I do not care. When it comes to trading, I just want to be a trader. I don't get paid to, like, my thesis. It doesn't matter. Sure, I could come in here and say, hey guys, I think the market's going to rip. It rips. You guys give me some credit. You're like, hey man, that was awesome. But at the end of the day, we get paid for executing a plan. Okay. I don't get paid trying to think about what's going to happen months out, right? You guys are all here looking for a process, and our process is pretty straightforward. Let's lean on supply and demand. News is a catalyst that pushes price into one of those levels, whether it's demand or supply. What the news is, you can take and you can digest it, but once you digest it, it's in there. It doesn't go anywhere, and we tend to hold on to things. And so when it's going against our thesis, we have a harder time being stopped out. We have a harder time jumping into the other side of the trade because we have taken the time to believe in what we saw. Now, gosh, man, this is really a passionate subject for me because every timing is the variable for all of this stuff. All of you can be right about your thesis, but be wrong right now, you know? And that's the thing I think that hurts when we really like attach ourselves to these because you can be right. If you think the market is going to squeeze and go to the upside 50, 50 points tomorrow, and you're really bent on that, and you put all your money into a daily expiration on an option, but expires worthless, you lose all your money. And let's say Wednesday it actually does that. Timing is the variable. So just know that all of your opinions, the way you guys feel is great, but in Trendy, we only want to discuss the things that I teach. So if there's something outside of that, keep it to yourself. I don't want my members even looking at that stuff in my room. If they choose to go outside of that and find that type of information and they are seeking that information, I can't stop them. But this is my room, and this is what I ask, and I politely ask you to keep it that way. Okay? So the skew, all right, what I was getting to is the skew. I have drawn this red line several weeks ago, maybe even months. I found this level just by going back to the inception of when the skew was starting to be tracked. All right. If you were to put a SPY chart in the background, which I don't feel like doing because I've shown you guys many, many times, but every time we come into these levels here, the market has bounced big time. Okay. So, demand. Right before the end of the year, almost everything we were tracking was coming into quarterly demand. What does that mean? It means without any type of news, understand that demand is down in those levels. We have shown proof of concepts of this for a very long time. The skew was coming down into these levels. In order for the SPY or anything, Amazon, Google, it doesn't matter. In order for price to reach to these extreme levels, we must have bad news. Okay? And typically up here, it's hard to drink that Kool-Aid, right? You have euphoria. And you think to yourself, like, yeah, I'm not getting short. And I'm guilty of doing that. Okay. It's really difficult after a huge run, right? 2021. It's really hard to drink that Kool-Aid. But once things start dropping and the bad news just keeps coming in and coming in and coming in, and let's just say that this is demand on the SPY and the skew is coming down these levels, what I can tell you is that if you're drinking the Kool-Aid here, instead of actually going short up here, you're late. You're late, okay? You're just late. I'm not saying it can't continue down further, but you got to give it a little bit of room to bounce back up into resistance levels. And I think that's what's going on in the market right now. Okay? Don't attach yourself to the idea that we have to tank down here. We were at extreme levels, and a lot of stocks in the market, we got to pull back. Okay? So until things start to change, we push up into supply, we push up into resistance. This quarter, the earnings are absolutely disgusting, right? Inflation, we continue to see data that's saying that it's actually increasing, all right? And that there's a lot of stuff out there showing us on the charts first that we're actually in supply zones and resistance. I think it will actually happen, okay? That the market can actually get a nice, healthy pullback, right? But for right now, everything lined up in the end of the year telling you that the market could bounce. This is where we were. This is where we are. Now, going back to the skew and looking at this, okay? Going back to the skew. These levels up here, I know it's hard to see, but around 145, these were the levels for years. If the skew pushed up in here, this is where we then looked at SPY, Qs, ES, NASDAQ, Dow Jones, IWM. And if they were in supply zones, we felt very confident to now get out of your longs and start a short position for several weeks out. Folks, we are all the way down here. Okay? You haven't seen extreme greed yet. You haven't been like wowed. This little bounce that we're happening right now, right? We're sitting over here on 121. This thing could go up to 150. Okay? Just let that sink in for a bit. Okay? It's easy to be wrong for a very long time in the market. All right? It's very easy because I'm telling you, you start get up here, it's very euphoric. You're like, man, there's nothing that could stop the market. But down here, just my own opinion, what we're seeing is very normal. Get rid of the news, guys. Forget about it. The technicals told us that the market was bouncing. The news and everything else that you're reading, because you're not reading the charts if you're thinking otherwise. The charts are saying that the market was looking for a bounce here. That's all I can tell you. Okay? All right. So, skew being down here, noticing where it is. What's interesting, remember I said this several months ago, I've never really looked at the skew as like trading the edges or the cloud, but we noticed that our indicators work really well. So what's interesting is we could pop a little bit more, but as we get closer to this cloud, be cautious. TNX, boom, coming down into the 9. The dollar is still in demand. The skew approaching resistance. So basically, if this were to come back down on the skew, that means, the market's moving back down. People are jumping back on the put side. Okay. Now, another thing before I move on, I want you to, if I didn't say this or you didn't understand it, down here, the SPY has dropped significantly. Basically, participants in the market, including you and I, we are overly exposed to the put side. Okay. And if you look at the fear and greed meter, it would be on the fear to extreme fear side. When that happens, if you're in charge of the market, how do you take everyone's money? How do you do it? You rip the crap out of it. Okay. So this is that area where they rip the crap out of it and people get run over. Okay. So again, be careful. Let's go ahead and move on. I think I made my point there. Fear and greed index is at 63. Once again, folks, it's been forever since I've seen it over here. You have no idea. You think that this is hurting bears. We're not even close. You pull this thing this way for some odd reason, that's where it's going to start to burn. Okay. This is just kind of like, medium rare, right? This is extremely cooked. All right. We still have a long ways to go, folks, if the market wants to continue pushing up, and there's still some major pain that could happen. Now, all of this said, this is something I like to say over and over. And I've said it on the mic 1,000 times, and I'm going to say this again. Majority of people, for some reason, I don't know how the market does it. You got to give props to it, but it confuses people a lot right into earnings. Everybody starts to feel a little bit more like confused, and they start, thinking about other um, ways to trick the market. And the one thing that always keeps me pretty grounded is I don't know what people are going to report, these companies, right? And if I don't know what they're going to report, I can't really get convicted. I need to see what's going to happen. And with the trendy strategy, we got our levels. We have the PMZ, you know? Remember, we don't get paid to, you know, to speculate. We really don't. I mean, sometimes, yeah, sure, but that's like a 2% chance of happening, right? So I want to be very patient going into this week and next week. Let the market digest a little bit. Again, it's down just a little bit here, making a little bit of money on the short side of futures. But other than that, just understand and respect that that it's earnings season, that the market has pushed up. We could still push up more. Right now, we're just digesting, okay? And you got a lot of room over here to really hurt bears. And you also have though on the bearish side, this thing could go from 63 all the way to here, all right, and put some major hurt on bulls. All right, but one thing it's telling me right now, just be cautious, be patient going into this week. Okay. All right, so the next thing is going to be futures. Okay. The future chart's pretty straightforward. Once again, I like to do weekly. All right, so here's your ES futures. If you notice, we're rounding out. We went from red to white on momentum. And after, I don't know, 2 weeks up, this could be three white soldiers. Okay, so please keep that in mind. But for right now, it's sideways to down. Okay, currently it's down 7.5 points. But right now, it's sideways to down until we start to build value above last week's candle. Everybody understand what I'm saying? So again, last week's candle, you can draw a line above there. Notice how it kind of came up and made a high, I guess, last night or today. It needs to actually probably close above there on a couple 4-hour candles before I feel convicted to the upside that it will continue, all right, to be a continuation candle to the upside. What else? I changed some levels in here. Bulls need a weekly close above here. Up here would be your next target, 82 and 41.31, if we indeed get that third continuation candle to the upside. If for some reason we pull back, I would expect the cloud or this demand zone to hold. So, around 39.44 by 38.72. And then your next chart is going to be the daily. And this one, again, trigger longs. I like to do this, trigger short, and then your resistance levels. Just remember, if price were to come into the trigger longs, I'm going over to a 5-minute, and then I'm checking out the TTM squeeze. I'm looking to see that the red bars down here go to yellow. All right, that just lets me know that the selling pressure has eased up. But right now, these are the levels. All right, so wait for the levels to do anything. Try not to speculate too much in here, but again, can't build value above there. I think it's sideways to down. All right. Next thing is going to be the 4-hour on the ES futures. Okay, just like this. And you can see here on the 4-hour, we have an inside and down. And then down here, there's a 15-minute zone. I'm calling this a chop zone. And the reason why I'm saying that is because I expect this to be resistance for now. But if it were to come into here, we could see it bounce up, back up into resistance, and then back down. And we went through this cycle several weeks ago. If you guys remember, we had that 30-minute zone and it kept working over and over and over. I believe that this area right here is going to be really important to kind of let us know what the next cycle is. Okay. The next thing that I want to point out is going to be once we get above the accelerator, we open up the setup called ACDC. And if you're a pro member, the ACDC setup is explained here in Discord underneath the education tab. Okay, if you're on trial, you don't see that education tab, just so you know. That level is basically about 40, 30 and a half. So just know that I would need to see a couple closes above there, probably at least on a 4 hour or a daily. All right. So the next thing, I think that pretty much sums it up. You can see also all the levels down here. So if you have the indicators or the edges, and if you don't, again, please reach out to me. I have an opportunity for you. If you don't have those, I want to say off the top of my head, like 90+% of people have these in here. You know, we're a pretty small group, but we also have a lot of people that have been here for a long time. So this pretty much probably relates to just more the newer traders or the people that are renting the indicators on TradingView. If you're using Thinkorswim and you're interested, again, please reach out to me as I do have a deal. The next thing that I want to be looking at is going to be the NASDAQ, and that's going to be the weekly. Let's go ahead and go over that. Same thing, rounding bottom. Looks a little bit different. We don't have two continuation candles up. I do believe that there's a lot more reward here in the NASDAQ if it can hold the support, which is the trendy edge down here in the 618 of the rally around 11,271. It's a hard time for it. All the names that kind of make this up are reporting soon, and I think you're just kind of stalled out in here. But you can see my levels. Take note of those. If you guys have any questions, please let me know. And the next one I'm going to look at is going to be the daily. Same thing, resistance. We have trigger longs in here. It says only if small time frame triggers. Small time frame again is going to be when we're talking about the TTM squeeze on a 3 to 5 minute chart, looking for red bars into demand zones, right? And then they turn yellow. That's what I like. If we're pushing up into where it says short trigger, I go over to the 3 to 5 minute, looking for the TTM squeeze. What it should be doing is showing me trendy blue, okay, but then turning dark blue. That dark blue is more of a confirmation that I can at least try to go short from there with my risk that I'm comfortable with, okay? Next thing, going to go into the 4 hour on the NASDAQ. You can see it here. Once again, kind of poking into that 4 hour zone here on this holiday. And then price holding the 4 hour, or sorry, the 30 minute is what I'm showing here, but this is a 4 hour zone. 30 minute support is down here at 11,536. And if we dip down into the 4 hour zone, I'd be looking for buyers to step in there. Pretty much that sums up the BMA for this week. No huge announcements except for the indicators. If you guys want to reach out to me, please direct message me. Other than that, we have a short week. Let's make it a good week. I do have a couple positions on to the long side. I'll also have a short going on here in the futures. If you have any questions about those, please reach out to me. I'll also be doing some scans later on tonight for possible trade plans. Trade plans are more about charts that I would like to trade for a couple weeks. And then on the day when we open up, I like to talk about focus trades, and that's where Melissa and I put on the focus trades for the day. Remember, we start 30 minutes before the market open. I'll jump on here, discuss our plan. Melissa will discuss her plan, and then from there, we get into trading. I really appreciate you guys being here. Can't wait to trade with you this week. I hope you have a great day. We'll see you again tomorrow.